Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 50th Commitments of Traders report of 2023, a report that was issued on the 15th of December, which happens to be my daughter's birthday, so happy birthday to you, my darling. Let's get to the review, and of course a brief reminder for those who are just joining in and are new to COT analysis here at COTBase.com. You'll find a lot of educational material. Not only do we have these in written format, but we have some useful videos as well on our website and of course on our YouTube channel. So if you haven't subscribed yet, please do so and hit that like button. That would mean a lot to us. Thank you. And back to the review, starting off with our first market, which is going to be wheat. Of course, we're analyzing net positions, the classic, or as CFTC calls it, legacy data, futures and options combined data type. And based on a 52-week look-back period, we can see that the Chicago wheat, because this is the Chicago wheat, there's three different wheat markets to choose from. Here we have a 33% change in commercials net position, this being a bearish change signal. The size is definitely greater than average. We have witnessed a similar larger change in the previous report, which as you can see seems to be one that was effective, pushing the market a bit lower. This recent one suggests that this can continue on, but I always advise to not only look at changes in traders' net positions, but also have a look at what they're doing overall on a longer term time frame. This is a 5 years chart, and you can see that 2 reports ago we were actually at a significant bullish COT extreme in this market, suggesting that we may have reached a bottom. We may see a reversal in this downtrend. We could see the increases in prices of wheat coming in the next couple of weeks, month ahead of us. So we have a bullish extreme combined with a bearish change signal. Emphasis is always on the longer term picture. But of course, in the near term, we can expect a bit of a decline after this rally that's been going on for a couple weeks now. Moving on to sugar, here we have a 26% change in commercials net positions, a bit smaller than the one before, but still greater than average. You can see that the one from last week had absolutely no effect. The market was able to continue its decline, but we are once again receiving a larger than average change size, suggesting a bit of a rise coming. Now, not only do we have a bullish change signal, but actually with these moves, we are getting closer to bullish extremes. Now, when I say bullish extreme, of course, this is on a narrow time frame, let's say a 2 years, because if you look back in time on this 5 years chart, you can actually see much greater extremes back from 2019, and we are definitely far away from those levels. So caution is advised. We may see the continuation of the decline in sugar for another couple of more weeks, month, before reaching an extreme that's at that level. In relative terms, again, if you're looking at a 2-3 years time period, we are getting closer to more bullish levels. So yeah, interesting stuff over here in sugar. Moving on to soybean meal, here we have a 23% change in commercials net position. Switching to a 1 year chart, it becomes visible, larger than average, coming after a decline that's been going on for almost a month. So it's a good signal suggesting some strengthening in the near term. Moving to a 5 years chart, you can see here a couple weeks ago we had a bearish COT extreme from mid-November, just around that top. Successful signal. I'm sure if you've been following me in the COT reviews, I mentioned this a couple times, that actually soybean markets, so soybean oil, soybean meal, these are actually markets that I think COT Extreme Analysis works very, very well. So we had this bearish extreme, put an end to this rally, and we are seeing lower prices And of course, not surprisingly, we do get these bullish changes. So you always have to analyze COT change and extremes in relationship with each other. I think that's quite important. Now, I'm going to pause here with Classic COT Review and move on to our TradingView platform and show you the iCOT Intraday Indicator. And from my previous COT review on the 49th report, I was showing you a setup where I had proper settings. This is going to be a default setting for the indicator. So we're going to throw the scores on the chart, which, as you may know by now, is very important to understand the relationship between the scores and then the signals, and put the after signal, the iCOT Intraday Indicator with after signal on our chart. This is how you do it. As I've said before, I always like to have two indicators on the chart. One that is set to any long, meaning any signal that is pointing upwards. I'm interested in that signal, not just the stripe signals. As you can see here on the chart, we have a bullish green stripe signal, and that's when we get this buy signal from the after signal. Any long, meaning any signal that's pointing upwards, I'm interested in, and any short is going to be the other one, taking trades on the other side of the market. And there you go. Just to show you what a default setting looks like. You can, of course, change that, but I think even with the default, in most cases, the signals are pretty good. This is a 15-minute candlestick chart, so anybody who's trading in the intraday time frame is probably going to be looking at these charts as well. Back to the review, moving on to large speculators, COT Extreme Analysis. We have the agricultural complex, meaning all agricultural commodities, futures markets. COT data is combined into one complex data. That's for our subscribers. We're going to move on to orange juice, which was analyzed last week. Not much of a change, a bit larger extremes, both in commercials and large speculators. This is, of course, a bullish extreme if you look at a 2 years time frame, but there's definitely space left to reach even greater levels. Crude oil, the Brent crude, here we have a 90 report extreme. And of course, this is more of a bearish COT extreme, which is, of course, suggesting we could see the continuation of this decline. And last but definitely not least, we have live cattle with a 72 report extreme. Here, this, of course, is a bullish COT extreme, suggesting strengthening in the next couple of weeks and month ahead of us. Thank you so much for your attention. If you are interested in a more in-depth COT analysis, of course, you can do it here at cotbase.com. If you have any questions, always feel free to reach me at info@cotbase.com or just comment underneath the video. We're here to help and assist you in your analysis of COT reports, or of course our wonderful iCOT intraday indicators as well. Have a wonderful weekend. Take care. Goodbye.